I, Professor B.K. Jain, Dean MBA, Biyani Institute of Science and Management of Biyani Group of Colleges, welcomes you in this lecture series on the subject Management of Financial Services of MBA 3rd SEM. In the series of lectures, this is number 4, and the topic to which this lecture is devoted is development banks and investment banks. We have two broad categories of these banks. One are known as development banks, others are known as investment banks. Why they are known as development banks? Because they have been specifically created at national level, and they have been entrusted the responsibility of developing a particular sector of economy, and that is why they are known as development banks. Individuals cannot go and open their account, and in fact they do not exactly perform basic banking function, but they are assigned the responsibility of developing a particular sector of economy. These development banks, most popular and common, are number 1, National Bank of Agriculture and Rural Development, popularly known as NABARD, which was created in 1982 for the purpose of developing agriculture as well as development of rural areas. These are two core areas of our economy, as around 70% people even today are residing in villages and they are dependent on agriculture, and that is why there was a need to create a separate institution at the national level who can take over the responsibility of not only developing agriculture but also developing rural development in the country. In fact, this NABARD was created by Reserve Bank of India in 1982 by providing 50% share, and the remaining 50% share was provided by Government of India in this NABARD. Since it was created by by Reserve Bank of India, two important departments of Reserve Bank of India, that is Agriculture Credit Department and Rural Planning and Credit Department, were transferred to Reserve Bank of India, and there was one more institution that time working was Agriculture Refinance and Development Corporation. So this ARDC was closed, and these two important functions of Reserve Bank of India were transferred to NABARD, and NABARD started functioning in 1982. Broadly, 3 types of functions are performed by NABARD, and in these 3 functions, most important is the credit function, then we have promotional functions, then we have regulatory functions. Under credit function, the basic job of NABARD is providing short-term, medium-term and long-term credit for agriculture and rural development. This credit is being provided to all 3 agencies which are operating in the rural credit system, and these are number 1, commercial banks, cooperative banks and RRBs. In fact, commercial banks are also greatly involved in providing finance for agriculture as well as rural development, and that is why NABARD is also controlling commercial banks. Then major financing of NABARD goes to cooperative credit structure. The entire structure is dependent at the nation level on NABARD, and then down at a state level we have institutions like State Cooperative Bank, State Cooperative Agriculture and Rural Development Bank. Then they have their own structure down to village level. Then in case of State Cooperative Bank, institution exactly below them, they are known as District Central Cooperative Banks, and they borrow money from Apex Bank, State Cooperative Bank, and State Cooperative Banks borrow money from NABARD. At the village level, there are primary cooperative agriculture credit societies operating in the short-term structure. In case of long-term structure, we have at the state level State Cooperative Land Development Bank. Then at the primary level, there are Primary Land Development Bank, and this entire cooperative structure is dependent upon NABARD for their financing needs. Then RRBs are also operating in the country, and they are also borrowing money from NABARD, and since they are also borrowing money from NABARD, they are also subject to inspection and supervision by NABARD. Then next is the very important function, that is promotional functions of NABARD. They provide free training facilities. They also provide money for research and development, and NABARD is also providing or performing promotional function through institutional development. And in institutional development also there are various schemes through which NABARD is giving money to different types of institutions. The third important function which is performed by NABARD is the regulatory function. All these three agencies, that is commercial banks, cooperative banks and RRBs, are subject to supervision and control by NABARD. And NABARD, particularly in case of cooperative banks, it is conducting statutory inspection, particularly of state cooperative banks and district central cooperative bank, and voluntary inspection of institutions engaged in the field of long-term credit, that is the state cooperative agriculture rural development banks and primary agriculture and rural development banks. So in fact, NABARD is a basic and very important development bank at the country level, performing all these three functions. Next to NABARD, we have another very important institution known as National Housing Bank, which was also created by Reserve Bank of India, and even still today it is working as a subsidiary of Reserve Bank of India, and it was created in the year 1989, and its basic objective of creation was to provide financing support to those institutions which are engaged in the field of financing housing. In fact, housing is the biggest problem, and there is a lot of shortage of houses in our country, and that is why at the national level government and Reserve Bank of India created National Housing Bank to work as an apex level institution to promote housing sector in our country by providing credit. Now here I would make a special mention of PM's target of housing to all by 2022, and in the year 2022 we will be completing 75 years of our independence, and PM wants that after 75 years of our independence, everybody in country should have house. So there is a target that by 22 we would be providing housing facility to entire population. The another important bank which has been created is known as Exim Bank. Full name is Export Import Bank. It was also created in the year 1982 for promotion of internal trade. Promotion of internal trade means we want that our exports should go up, imports should go down, and in both export and imports, this Exim Bank provides various sort of facilities, various types of credit, various types of letter of credit, guarantee, etc., so that at the national level, both internal trade in the form of exports and imports could be promoted. Now, the last sector which remains is the industry, which is a very big sector of our economy, and for this we have created a very long list of institutions at the national level which are there to provide money particularly for long term to the industrial sector. Now in this name I have make a mention only 3-4 big institutions. One is known as IDBI, then IFCI, ICICI, IRBI. These are the institutions created at national level, and they all are engaged in providing medium and long term credit for promotion of industries in our country. Now at state level also, state government have also created institutions like state finance corporations, state industrial development corporations, which promote and provide financial support to industries at the state level. Now these are in very brief, they are different types of development banks. Now I come to investment banks. As the name says, these are the institutions which go on collecting savings from public, and they have a huge surplus, and they use that surplus for financing, and that is why they are known as investment banks. Now the 4 types of investment banks operating in our country are: the first one, that is biggest one, is LIC, then we have GIC, then we have UTI, then we have mutual funds. I would stress more on LIC. The LIC is a Government of India undertaking, and it was created in the year 1956. Many companies working in the field of life insurance were merged and LIC was created. Now LIC is the, why it is no biggest investment banker? Because it has continuous income of insurance premiums. Insurance premiums go on accumulating. The expenditure is very low on, particularly when the premature payment are to be done because of the sudden demise of people who were get insured, but the proportion or ratio of such claims is very limited. Now it go on collecting money and the amount is paid along with the bonus at the time of maturity. Now it has huge surplus. Every year the surplus is increasing, and as on 31st March 2015, the total investments of LIC went up to 3.89 lakh crores. This figure itself speaks how great surplus it is generating and how great advances it is making to the needy. It makes advances to various types of institutions, including state government and various types of corporate bodies which are particularly working in the economy. It also provides a lot of money to state level institutions which are engaged in the development of housing sector. Then next is General Insurance Corporation of India. After LIC, it is engaged in, while LIC is working in the life insurance sector, GIC is working in general insurance sector. Then there are 4 public sector companies like LIC. They also go on accumulating money, but the money accumulated by GIC as compared to LIC is slightly lower, because generally GIC undertakes different policies, the period for which is 1 year, and again that period is not very long. After 1 year the policies are required to be renewed. They are in the business of general insurance like medical, health, then building, earthquake, etc. There are so many, vehicle loan, there are different types of policies which are issued by GIC. Besides GIC and LIC, there are a lot of companies which has now come in the field of life and as well as non-life insurance. Now we have another important company, Unit Trust of India, which is working since last 50 years, more than 50 years. The full name is Unit Trust of India. It also accepts surplus money from public in terms of units, invest in different types of equity market, get higher return on equity, and then pass on this return to ultimately to the person who have invested their money in units issued by Unit Trust of India. Lastly, we have a very popular group of mutual funds. Presently they are operating in the whole country, and every year their total accumulation of money is going on. There is a lot of faith in these mutual funds of general public. Why? Because they are providing good return to them, a return better than the bank interest rate. So almost all banks have created their mutual fund, and they are making investment in equity market, and by making investment in good equity shares, they get very good return from those companies, and whatever return they get, they pass on this return to ultimate investor. So under the investment bank, I once again repeat, we have big institutions like LIC, GIC, UTI and mutual fund. Why they are known as investment banker? Because they go on collecting money from public and they invest this money and provide money to the needy. Thank you, and thank you.